Hello there. My name is Erik Robbins, and I'm going to be discussing my project for ME 6225 on manufacturing public policy. And the topic that I've chosen to discuss is the U.S. Export-Import Bank, also called EXIM. So let's discuss what the EXIM Bank actually does. The bank was established in 1934 by Congress, and it has to be reauthorized by Congress every several years. It provides financing and insurance to manufacturers in the U.S. who sell outside of the U.S. It's government-backed corporation, so it's linked with the U.S. Treasury, and the services that it provides are not meant to compete with private institutions, but fill in gaps that the market cannot provide. Its future status is politically unclear, and Congress currently has established a stopgap measure to continue its charter, but many members of Congress question how necessary it is in this modern age. The Export-Import Bank sells itself as an agency that helps support and protect American jobs, especially in the manufacturing sector. One statistic that they use is that more than 85% of the transactions that they process benefit small business exporters. And this helps support nearly 290,000 jobs, both directly and indirectly. They also claim that their agency is necessary because it fulfills a similar function of other export supporting banks seen around the world, which are referred to as ECAs, and that it's necessary to have in order to level the playing field for American companies. Also, while the agency is taxpayer-backed, it does not present a risk or a cost to taxpayers, since over the last several years it has returned a profit of nearly $1 billion per year. The risk that it presents is also very low, considering that their default rate was only 1.5%, even during the Great Recession. Over the years, the bank has received quite a bit of criticism for several reasons. The main one is that the bank is no longer necessary because private financiers can provide the same services, although at a higher market rate. And essentially, the reason why the bank can loan and give out insurance at lower rates is because A, it doesn't really need to make a profit, and B, it's able to borrow more cheaply since it's part of the government. This effectively acts as a subsidy to the companies that it lends out to and that it provides insurance for. This is especially troublesome because the vast majority of the dollar benefit goes to very large companies every year, companies like Caterpillar, Boeing, and GE. In fact, in 2012, Boeing received 82% of the total loan value. This has hurt its credibility as a champion for small business. There's also potential for distortionary effects in the marketplace, since export customers are heavily favored over import customers. This can be seen in the case of Delta Airlines, who claim that they are put at a competitive disadvantage since they have to pay higher price effectively for their aircraft from Boeing than many of their international competitors. As such, they are harmed by XM's subsidies. The last major criticism that XM receives is that they put the taxpayer at risk if either their loans or their insurance should go south. While this is unlikely, the same was true of Freddie Mac and Fannie Mae in the mortgage market, who were taxpayer guaranteed and ended up costing the taxpayers tens of billions of dollars. So all of this brings us to the current status of the EXIM Bank. As I mentioned before, the bank needs to be reauthorized by Congress every several years. Its previous reauthorization was set to expire in September of 2014. As part of a bill meant to prevent the federal government from shutting down, Congress extended the authorization for the EXIM Bank through June of 2015, essentially a stopgap measure. After this, it is unclear whether the bank will be reauthorized or not. Lastly, I would like to give some recommendations for the future of the EXIM Bank. In order for it to remain politically viable and economically justifiable, the agency is in serious need of reform. It should refocus on its mission of serving small manufacturers and companies that have true difficulty finding financing through the traditional means of commercial banks, especially for customers in countries where it is difficult to find financing. The organization should also make sure that they are perceived widely as politically independent and that certain industries or certain companies are not favored. This has been a problem in the past as companies that are seen as being politically favored, such as the solar industry, have received generous loans in the past. As XM largely functions as a normal commercial bank, it should not have any sort of competitive advantage against others in the marketplace. This means that their assets and liabilities should not be taxpayer guaranteed, and that the bank should have to borrow at commercial rates rather than at treasury rates, which are inherently going to be lower. Here are the sources that I used for this project. Thank you for listening, and I hope you learned something interesting today.